Good morning, folks. It's Monday, the 6th of October, 2014. It's 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Overnight news, pretty light. German August factory orders missed. Came in at negative 5.7 month on month. Consensus was for negative 2.5. That's more than doubles the downside consensus. Year on year, negative 1.3%. The consensus is plus 2.6, so 3 times lower. It's a big deal. The Spiegel says the IMF will cut its German growth forecasts for this year and next. Japan's finance minister says the yen at 108, 109, not particularly weak, back at pre-Lehman levels. Bank of Japan's Kuroda says Japan export volumes are still struggling to increase. The Wall Street Journal is citing EU officials as saying that Brussels is preparing to reject the new French budget for 2015. Goldman's Hatzius, it's a great, I guess, Roman name, expects the Fed to keep considerable time in October statement, still first hike set for third quarter of 2015. So got to keep an eye on that again for the October Fed, how we treat this considerable time thing. It's likely to affect the STIRs or the short-term interest rate products. Hong Kong protests continue, but numbers of protesters much lower. Some protesters reportedly left amid concerns about a police crackdown. Civil servants returned to work today. No agreement on talks between protesters and the government. As far as economic and other releases today, there's nothing for the U.S. The Canadian markets have a 9 o'clock central number IV Purchasing Managers Index, expecting, I guess the previous is 50.9, and that's it really. I don't see anything else. There's the usual Monday 10:30 a.m. 3 and 6-month T-bill auctions for 48 billion. So very, very quiet on the calendar front today. Let's look at the markets. So let's step back and look at Friday. Friday trade was worked out beautifully as expected. So what we did on Friday is, if you recall, Thursday, we finished fairly strong on what looked like a V bottom. This is Thursday right here, a drop. Found buyers at 18.25 and then basically took back 100% of the morning drop plus some, with a high of 45.25. And with the trader bite on Friday, I had discussed that the expectation was for the market to open out of range and to drop. The higher probabilities that it would likely drop, with a low probability, I think I put it at 21%, of closing this gap down here at 38.50. And essentially what it did is it dropped to 45.50, just a tick ahead of 45.25, which was our primary trade idea, that it would pull back to the high of Friday, and then it's likely to push towards 60. And the first test is to 57.25. Rotation back, pushes to 60, gets down to the mid. We go sideways for most of the afternoon. The ultimate target for Friday was 1965. As always, you don't have to take my word for it. You can always go back and watch the YouTube video of Friday's pre-open on youtube.com/user/FuturesTrader71. What it did, though, in the afternoon is it finally broke higher. We're looking for this break higher to 65. It finally breaks higher, but comes up 2 ticks short of our target of 65. Stops at 64.50, and then sideways to close with the point of control in the upper section of Friday and outside of the IB. Very bullish. This looks like a short covering profile, despite the fact that the delta was really hit on the close. Lots of sellers into Friday's close here. It still maintained its closing near the high. That's a very bullish close. We had a similar close to this a while back, but it ended up failing a couple weeks ago, a couple Thursdays ago, at right here at 92.50. This was a much stronger buy day, but I still think that this is the big week high that we have above us. And looking forward to the market heading up back up there. Overnight, the market opens and it just does not look back. It immediately goes higher and continues to hold near its highs. Very bullish. Overnight inventory is long. We have a gap now between 64.50 and 69.75. We have a closing gap to 60.75 from 69.75, the same distance we had before, puts us at about 20% probability of this closing. The expectation on the open, look at all this volume. The volume pretty much, actually all of the volume happened above Friday's close and above Friday's high. Inventory is absolutely, it absolutely appears like the inventory is long. So the expectation is for the market to balance that inventory on the open by rotating back down. This sets up the same kind of expectation as we had for Friday. We expect that we would get responsive selling back into the 65. The 65 remains, 65 quarter remains a naked point of control. Here we are. We're templating the 30th. This is our key template day, so we're watching closely for what happens based on the structure of this day. So what we have now is 65.25 is the point of control that's still naked with the market above. So the expectation is to at least come down to 65.25 for a retest. We are back in the key balance, big balance from this past month. So what we've done is we've dropped out. We've dropped out of balance here on the 1st of October, and we have come right back in. So you can see that here, that we've maintained this balance pretty good for the entire month of September and half the month of August. And then on the 1st of October, we dropped right out of it and started to move into the trend area. The target below, as it moved into this point of control here, the target below was 15.50. 15 quarter, and it got to 18.25 before it found buyers. There was just not enough interest there to pull it back to this point of control from way back here. So fairly bullish there. We still have a closing gap beneath us, and we're forming the same thing. So just as it dropped quickly down here, it's found buyers and is moving through price quickly. The big target above, again, is 87.50. That's a key target in this area. And as the market pushes higher here into the balance zone, we start to look at areas such as 80, 1980 today is a key target today above, and then of course 87.50 as I just mentioned. Essentially what is likely to happen on the open, because we are back in balance, remember this is not new high territory, we're opening out of range, so the probability of an open drive on the open, in other words, a much higher time frame, much bigger business that needs to be done, is more likely to step into the market in that situation. The key expectation, though, is for an open auction out of range. It is pushing up. You still have a fair amount of time for this market to drop down before the open, but it's stuck up here above the overnight point of control, above Friday's high. So I'm looking for an open auction out of range, potential test of the overnight high, but I expect responsive selling back into 65 and a quarter at least. That is my primary trading plan. I expect it to chop around, try higher, and I expect it to fail back into Friday's range. That's the primary expectation for today, is that I would get mostly responsive selling and for it to fail back into Friday's range. For potential tests of Friday's point of control and a choppy morning. There's just not enough here. Remember, we had non-farm payrolls on Friday, and traditionally, not always, traditionally, once we move into Monday after non-farm payrolls, we end up with a fairly sluggish day that following day, much tighter range. And just a pretty choppy trade, and that's really what I'm expecting. But I'm expecting the market to trade with a downward skew. I expect responsive selling into 65 and a quarter, and if it regains Friday's range, then it's likely to move down into the 1962 area and just chop around in this area. If it goes higher, the key area to test, the first key area to test is 72 and a quarter. 72 and a quarter, and then 80 is the key extended target above, with 87.50 being the point of control, the composite point of control. I don't expect for us to get that today. It's pretty much out of the normal range of what the ES does on any given day on a buy side. So that's my plan for the day. If failing that, if the market opens, moves down slightly, or moves down into the 65 and a quarter and finds buyers and has a quick pop above the mid of the day, then I start to look for 72 and a quarter. 72 and a quarter. This is done. The rally point. 72 and a quarter. 1980. We're templating the 30th of September, so keeping an eye on the profile. 30th of September. That's where I get the LVN from here. But overall, once it gets through the LVN at 72 and a quarter, I think 80 is well within range. It's only 11 points up from where we are now, and probably about 15 points, which is the expected range up once it tests lower. Okay. As always, now I forgot on Friday to remind you that it is Friday and that it is non-farm payroll Friday. So to keep an eye on your risk. But that's not something that really needs a reminder. I think it's really important for you to understand this thing we call risk that everybody keeps talking about. It's really important to set in place how much you're willing to bet on any particular trade idea. For example, the key trade idea that I went over now, to open here, open auction, test the 70.50, and then fall back and test 65 and a quarter and chop its way down in. I have a set amount of risk that I will take to see if the market agrees with my idea. The market does not have to do anything for me or for any particular participant. The market represents the aggregate demand and supply of all participants in that particular product, whether it's the S&P, a stock, an option, an ETF, it doesn't matter. The price here simply represents an opinion of what the future holds of all aggregate participants in that market. It's very important to understand that it's a basis that is a core belief and a core factor in understanding how this auction works. And this is all it is. It's an auction. I want to emphasize that trading the markets is not a mathematical problem. Mathematically, it can be described just like mathematics describe a lot of things that we do. Space shuttles and orbits and things like that we can do mathematically. I am an engineer, but understand the core thing that moves this market. The market moves up because more participants anticipate that it's likely to tick an additional time higher. Therefore, they buy on the offer. The market moves down because participants believe that it will at least go 2 ticks lower. That's why they sell on the bid. So it's a basic building block of how this market moves. Understand what the auction is telling you and what this layout is. Now remember, 72 and a quarter, by the way, if you took this, it's better seen on a 15-minute overnight. If you took V bottom that was put in the other day, right here, and projected and looked at this as the neckline and projected that up, the target of this projection, 100% of the neckline to the top of the inverted head and shoulder, is 72 and a quarter, coincidentally, 72 and a quarter LVN plus the pattern playing out. The pattern target is 72 and a quarter. So that's the key area I look for. As far as testing today. So you could use mathematics and patterns and stuff like that, but just understand what is driving this market, and that the core driver is the auction and how participants think this market's going to behave going forward. That's all I have for you today. I'm going to be on daytradingradio.com at 10 o'clock Central, 11 Eastern for the weekly update. And other than that, I'll catch you tomorrow. Good luck.